E-A-G-L-E-S, Eagles!
Hey, this is William Tidcup and Ryan Leary, and you are listening and hopefully watching the Use Case Podcast. Ryan, how are you doing today?
I'm doing good.
Good, good, good. We got Joel
I
on from
wasn't going to
Clair.
answer you.
Oh, really?
I
Well,
was just going to let you sit in awkward silence.
you just,
So,
just sit out there on that branch. Okay,
yeah, but
good, nice.
it's so for those that are listening, they won't understand. But those that are
Correct.
watching, they may understand because they'll see both Joel and myself.
Yes,
But I've centered Joel in my screen.
yes.
And so as he's not talking and I'm talking, it's very weird
I can see
because
that.
his mouth is not moving and my mouth is moving. So I
That
need to,
is, that's going to be a
yeah.
little awkward for
It
folks.
it is, yeah.
And I feel a little surrounded because both y'all are Eagles fans. So we're
Mm,
going to get past that.
mm.
Joel, would you do us a favor and introduce yourself and introduce the company?
For sure, for sure. It's a pleasure to be here. And don't
Sure.
worry, William. By the end of this, we'll get you a nice tight haircut. Allow you to become an Eagles fan as well. I'm Joel Frisch. It's a pleasure to be on, calling in from great city of Philadelphia today, representing Ryan's favorite teams,
Yes.
and excited to talk about Clair. Clair is a fintech company based in New York. I know that our founder and CEO has been on the show before a couple of years ago, and it's been fun seeing the evolution of the business. A lot of the learnings that we've had that have brought us to kind of our strategic focus and where we're seeing great success in bringing our solutions to the millions of American workforce. So excited to get into it.
Is there any pressure to call yourself a work tech or an HR tech play as well? Like you cover both. Obviously, you're fintech. Like I'm not taking you out of that category. However, you also cover work or cover a
For
part of
sure,
HR, right?
for
Is
sure.
there any pressure to kind of own that category as well?
Yeah, I wouldn't say it's pressure. Look, I think at the end of the day, we want to become the go-to embedded solution to empower these financial benefits for the American workforce. And I think if you think about how others have brought together two different folks on a spectrum. So think about something like what Affirm and Klarna have done for retailers, right? And so you could say that they're shop tech, you could say that they're fintech, but
Good
basically
point.
what they've done is they've brought retailers and consumers together to ease that transaction and make it valuable for both sides. And so we believe that there is an incredibly strong bond between employers and employees. Maybe not alike, maybe they don't
Yeah,
like,
yeah,
but they
100%.
certainly trust them. And
Unionization is
so
up this year, so there you
exactly, exactly. So there's that trust, and so those platforms that connect employers and employees are actually pretty powerful.
right.
And how can they leverage that connectivity to then offer things that make the experience, an embedded experience, more satisfactory for the employees while adding benefits for the employer like retention, attraction, et cetera. So yes, you could call us both.
Yeah. Okay, give us a use case, kind of set the stage here for the audience.
Sure.
In work tech, as employers are working with Clara, give us
Claire,
a use case of what that looks like.
Claire,
Claire, oh,
Like
I'm so
eclair.
sorry.
Like
Eclair.
No,
Eclair,
that's
yeah. Yeah.
Yeah.
that's
Well,
how
we're just,
Nico.
we're just we're the same way, right? We're beautifully attractive on the outside and sweet on the inside. And everybody wants it, right?
That's
Um,
right, 100%.
so look, the best use case is because we just went through this exercise. If you think about like work tech platforms, you're going to call them.
Right,
I'm going to segment them a little differently. So I'm going to say that there are human capital management platforms. The
right,
old payroll
right.
started adding HR benefits. You have workforce management, which are
Hmm.
primarily focused on scheduling the employee, make sure the employee shows up, can know that the employee is there, time and attendance. Then you have a bit of field service management. I'm trying to like
Right.
get jobs in the field and then assign in, employees to it. So you have those three categories primarily. A few different iterations. You could include PEOs, et cetera. But
Right.
if you think about those, there's maybe 700 to 1,000 of them in the U.S. roughly, big, small, whatever. When you go through that and you really look at like who the best platforms are for engaging employees, not necessarily biggest, but those that actually really engage the employee, the employees are using it on a regular basis. This isn't me just checking my
Right.
pay stub once a year for taxes. We see there's a universe of about 100, 150 of these platforms that really present this opportunity to provide highly engaged tools, a financial benefit like on-demand pay,
Right.
right to the employer, right to the employee. And the key with that is that the employer comes off as a hero for bringing this in, but they're not required to do anything. And that's an important piece, because the moment you start introducing friction, trying to bring a
Right.
solution from
Right.
provider to market, you're going to slow down how many people get access to it. And so, to answer your question on a use case, we just announced recently some partnerships. Use one like a big partnership like with Gusto, right?
Right.
Gusto, incredibly advanced, modern, payroll, human capital management provider, working with hundreds of thousands of businesses out in American marketplace, and they have been building a wallet experience for their members, what they call individuals who get paid, right? So
Right.
they have the ability now to embed our solution right into that experience. So Ryan owns a bakery. Ryan has 9 employees. Ryan uses Gusto to run payroll and HR. Now, when Ryan's employees open up their mobile app to, clock in or to check their pay stubs, they have the ability immediately to take an advance right there and control how frequently they get their pay. So that's the ideal use case. So you're really bringing this concept of embedded solutions, embedded finance into the HR space.
So I noticed that you used, and it might be semantics, but you use the phrase on-demand pay versus things that Ryan and I hear, earned wage access. Are those synonyms, or is there a difference in how you're using the terms?
Yeah, I think they're relatively used interchangeably.
Okay.
I would say the way to think about it is that earned wage access is the category. As
Right.
far as how the products are called, it differs a little bit.
Got it.
We call it on-demand pay because we think about it from the customer's perspective, from the employee, and they're really the hero in this story, right? They're the ones who are trying to take financial control of their lives. They're the ones who are trying to determine, hey, I need access now because I need to buy fuel, buy groceries, buy food, get my child to school. They think about it like on-demand pay. I want to get paid now.
Right.
The average person is probably in a bi-weekly, pay period. William, you were saying that you only pay Ryan every 3 months. Most people get paid
After a Cowboy win. That's
Yeah.
yeah.
I get it. So
Not this season.
yeah.
So you know what's funny is how about them?
You brought it up.
So Joel, what's interesting is it seems like on-demand pay seems like a better term than earned wage access. Like earned wage access is like a nickel phrase, but it's
hard to
almost like
say.
it is, and I can see people like,
Yeah.
why didn't we just call it? Like say make it easier for people to understand what they were
Yeah.
getting.
Yeah, I've had the opportunity to be in financial services and technology for a while now throughout my career, and across different customer bases, from executives of companies to international students who are trying to get to school to hourly employees. And if there's one consistent theme that I've seen across the board is that it all comes down to control.
Right.
When someone feels like they're in control, they feel confident. When they feel confident, they make decisions. They make decisions that are in the best interest of them and their families. And typically when you talk to someone about finance, about banking, about investments, and you're like telling them, oh, I have this great idea, whether it's a stock tip or like, hey, here's how you can access a home equity credit line to do that, improvements on your kitchen, Ryan. Or even like health insurance, right? When people don't understand it, they don't feel confident, and they just freeze up. And they're like, I'm not going to do it. And so the reason why I think on-demand pay makes sense from the consumer's perspective is because what you're doing is you're really giving them that control.
Right.
So when you look at the data to date, there's about 5% of the American workforce who are already using these tools, right? So in 2022, there was like 10 million folks who access these types of products. What's interesting is how frequently they use them. So the average person who's using one of these products is taking about 27 advances a year. So that tells you that's about twice a month.
Right.
Then if you line that up to I get paid biweekly, but now I can take advances twice a month. Now I'm actually in control because I'm getting paid every week.
Right.
And when you look at the use cases, we just rolled out with Gustos. We've been getting some amazing customer stories back. The use cases are spot on, right? It's all about needs, not wants. It's
Right.
all about folks who are like, "Hey, I was on a trip. I don't get my paycheck for 2 weeks. I need to pay fuel." Or, "Hey, I'm a single mom. I need to pay for my child's child care center every week, but I only get paid every 2 weeks." These are things that come up
Yeah.
Legit.
where some people may be solving this with credit cards as a float. Some people don't have access to do that. They need to figure out like how they actually manage their cash flow, and that's why it all comes back to control.
Have you seen any, and it's probably a couple questions in this, but have you seen or has the data shown that people who are taking weekly, or say 20, if they're in that group of people taking 27 on-demand pays per year, and they're essentially being paid week to week, is there a correlation to the amount that they're able to save as opposed to
Mm.
those that are getting paid biweekly on on what we would consider
I don't think
normal,
anybody
regular?
saves.
Well,
I'm
that
so
as
jaded.
well. Yeah, that as well. But
Yeah,
I mean, I'm curious, are they getting it and spending it, getting it and spending it more frivolously, as opposed to saving it a bit?
yeah, no, it's a great question. Look, I think William, to your point, like there's a couple things in there. One, financial literacy, like do people understand the power of saving, the power of something like compounding?
Yeah.
Right.
If you listen to good old Professor G, Scott Galloway over at NYU, he's been talking about this a lot recently with regard to taking responsibility, and he has an amazing chart that he shows with Apple, right? Instead of buying every iPhone that came out along the way, if you took that same amount of money and you invested in Apple stock, the impact
It's
it would
it's
have, and it's something like $2-3 million. It's
it's
pretty
insane.
impressive.
Yeah.
So I don't think there's enough appreciation for that. And I know, William, you've talked about before that like in America we don't get a lot of financial literacy in school.
Right.
I think that the other component of that is just the ability to save, and I think that if you look at the situation
Mm.
economically that we're in right now, you've obviously seen very impressively high inflation in the last few years. So things like food and fuel have increased, while wages have relatively kind of staggered off across
Right.
the last at least few years, 2 years. So that adds an element of pressure for like folks who are already living paycheck to paycheck. So the ability to save is pressured. That being said, when I think about the Clair product over the last few years, where we were enabling folks to access wages on an actual Clair card, this is changing, but this is what we've been
Right.
running the last few years. And you are able to see the funds that are coming in and the funds that are utilized. They are keeping balances, and so I think that there's an opportunity for folks who get it. You could actually set this up in advance. I've talked about this, with a few folks. You could set it and forget it, Ryan. Where like you could say, "Hey, I only get paid every 2 weeks, but I'm actually going to start taking advances on the first of the month, the seventh of the month, the 14th, and you can kind of play
Roll it into
that
savings.
spread." And particularly, in an environment where banks are paying higher interest rates,
Right.
some
Right.
of the neo banks. If any of you have Robinhood, you're getting plastered for their new gold account paying 5.5% APY. Obviously, you have to like line it up perfectly, but you could play that game because now you're in control.
Right.
What did you think? And I still hear it now about, especially from HR, about giving employees access. This is similar to Ryan's, but they use it as a cop out to not offer products, on-demand pay, earned wage access, etc. It's like the employees, they get paid this way so that they don't get into financial trouble.
Yeah. Look, I think it's a very natural reaction.
Right.
It's the same type of reaction. It's like, oh, I'm going to give my kid $100 bill. Are they going to spend it responsibly?
Hmm.
I think that some of that comes on me as a parent. Like, how have I guided my child? And
Right.
and second, that is like making sure we understand how these folks are going to use it, right? I think that's why it's really important when you talk to users, particularly active users, and they use things like needs, not wants. Again, because of the current product that we've had, we've been able to actually see the trend, excuse me, the monthly transactions. And it's pretty impressive to see that they're relatively low dollar transactions, $14 here, $20 here. The retailers that are primarily used on are things like fuel, Walmart, QSRs, food delivery. That's a better conversation. Are people responsibly buying food if you're paying that much in delivery fees? But
100%.
probably a conversation for another episode.
100%. 100%.
So look, I think it's a fair immediate reaction. I'm not going to use the examples of that I think some of the folks over at Intuit have used about giving man the access to fire. Like, of course they can burn themselves, but like look what it can do.
Right.
But I think you have to be smart about it, and I think that the platforms that we are seeing who are successfully thinking about this are saying, okay, this is a financial benefit, but how can we build on top of it? So you can build literacy on top of it. I was just talking to a large scheduling and time and attendance platform that was saying, hey, we are really interested in this product because what we want to do is we want to use this to incentivize shifts, incentivize upskilling. So it's like, okay, William, you can do job A. By the way, job B is available for Thursday. And in order to qualify for job B, take this upskill piece. Now you can do both jobs. And by the way, when you're done working job B on Thursday, you can access all this money. So if you start thinking about this as like multi-layered chess, you're actually improving the opportunity and you can motivate the employee to like make smarter decisions versus just taking this thing of like, well, if I give William $10, he's going to spend it in a bad way.
Dumb question alert. Do you see a future in which they take some of the on-demand pay and put it into savings or automatically route it into savings?
Absolutely. So I think the biggest lesson that we have learned in the last few years, and this is important for anyone in any product who's bringing anything to consumers, is that you need to listen to how they want to use your product, right? So over the last few years, the way that the product was set was that like all of the advances would come to a Clair account, then you could access in a variety of ways. The users have told us like, hey, I want the advances sent to my account the way I do because I already have things set up like bill pay, savings, et cetera. And you see this in the data, like the advances
percentage of this, send it here.
The advances would land in a Clair account and they would immediately be sending them out to other accounts. And so I think again, it comes back to like giving them that control. If you say, hey, I want it my way, and then I'm going to kind of set it up the way I have already or I need, then yeah, you can absolutely start encouraging like, hey, by the way, take this advance. If you were to direct it here,
fidelity, whatever.
Exactly. And I think that it comes back to this idea of being embedded in the HR system.
Right.
Because if you're embedded in that process and it's accessible and convenient, and it's tailored to that individual so that I know that Ryan worked X versus William worked Z, like we can actually then start layering on other benefits for you. So like a high yield, a savings, say, hey, you want to take this advance? Cool. Do you want to split it up to these two places? You can start doing that.
Well, getting back to the literacy part, a lot of people, in fact, 100 years ago, when I worked for Walmart, they did dollar for dollar matching on stock. Right, this is the 80s, so of course they could do that type of stuff back then. And my bit with payroll was if I don't see it, I'm not going to spend it.
Yeah.
But if I see it, I'm going to spend it. So I'd max out. I'd max out every paycheck. I think we were paid every week, but every paycheck I'd max out and get it out of the account, and then whatever's there, I'll figure out a way to live off that.
Yeah, I'm sure people will have lots of comments about the 401k system and how you educate early employees. However, you could argue that in the last kind of 10 to 15 years, the industry and the HR professionals have done a relatively good job of setting folks up for long-term financial benefits.
Right.
I think the challenge that we see is that there's not enough attention to short-term financial benefits. And so when you have employees who need help in the here and now, not thinking about retirement, which is 20, 30 years off, again, appreciate the power of compounding, everything we talked about, like why you should do that.
Right.
For those folks who need help in the here and now, you're pretty much leaving the employee to take a couple paths. One is they go to their manager or their employer and say, hey, I need help. Can I take an advance or can I get an advance on my paycheck? Or they have to go to friends and family who may or may not be able to help them. Or they have to go down the path of like very expensive, avenues. That could be credit card debt. That could be payday loans. So I think that the same approach that we took to long-term financial benefits, we need to start introducing in short-term financial benefits. And some of that has to do with like accessing pay. Some of that has to do with like Great. Did you know that you could take some of this for savings, like you're talking about, and start to increase that financial literacy of like, cool, how do I manage this week, this month, this year? Not just like what happens when William finally wants to go California dreaming in 20 years.
So how does an employer know that they need you?
Yeah, so I mean, I would tell you that most employers know because they hear it from their employees. I
Right.
think any employer that has either encountered employees asking for advances, any employer who has encountered losing employees because they go across the street for a small hourly increase in
Yeah,
their
50
wages,
cents more.
or has struggled to attract folks. I mean, I was just on a podcast case study the other day with a group that runs home healthcare nurses,
Right.
and they were talking about that this has become table stakes for them
Right.
because if they don't have this, they're literally losing nurses in the interview process who are like, well, but if I can't get paid today, I'm going to go to ABC Co across the street. So I think the employers recognize it. I think that the challenge in only being able to offer these solutions direct to consumer is that becomes like very challenging problem, very expensive problem, like you're seeing with a lot of like young fintechs, neobanks, etc., trying to buy ads on Instagram. The problem with going direct to employers, besides the fact that it's tough to scale, is that you're placing a lot of onus on the employer. And I
Right.
think that you can't treat the professional HR staff at a enterprise organization the same way I treat Ryan, who runs a chain of bakeries
Right.
and has a million things that he has to do, and this is just one of them. And so he's not interested in setting this all up. And so that's why I do think it comes back to the HR tech platforms, the platforms that are connecting for payroll, for scheduling, for time and attendance. And if we can bring this concept of embedded finance that has worked so well in things like payments, think about Uber, and things like insurance, think about like, you're buying your airfare on American Airways, and Allianz is right there. You don't even have to think about how much you need. They've already done the calcs for you. You think about like going to Best Buy, buying that big TV. I can just grab it and pay a firm right now, $7 a month for the rest of the period. And now HR, like HR is connecting them. So why shouldn't this be a seamless process? So now me as an employer, I'm hearing this,
Right.
and it's like, oh, cool, it's already here. I don't have to do anything. So I
Yeah.
think that's the key differentiator.
How fast is it, or how is it to stand up? So we've company. So let's say it's an enterprise company, and they say, okay, yep, this is it. They've looked at other stuff. They're like, okay, we definitely are going to go with Claire. This is awesome. Now what? Like okay, proposals are signed and all that other stuff, but like, okay, whoa, how long does it take them to stand it up and get it to their employees?
Yeah. So again, we're standing it up with the platform, right? So
Right.
let's take a workforce management platform, field service management platform like
Right.
Service Titan, somebody who's out in the field.
Right.
To stand up with a platform like that, you're probably talking. I've seen as fast as 3 months to get it fully ready, tested.
Wow.
Make it seem seamless for the users, and then their ability is to turn it on at once with advance notice to employers, still
Right.
giving the employer the control to say, hey, do I want my employees to have this or not? And I will tell you that when we do this, we just did this recently. Advance notice went out to 72,000 employers on this one platform and said, hey, new feature, you can opt out if you want. 60 out of 72,000 said for whatever reason they don't want to provide this benefit to their employees.
Right.
But the rest who didn't opt out, that becomes immediately available to all their employees. And so it's because it's embedded in the tool that they already are using to share, clocks, share schedules, get access to time punches, share payroll. It becomes available instantly.
And can the employer put like percentages of what they can draw down on?
So we typically set that
Okay.
at we typically set that at a max of about 50% of
Right.
gross wages.
Okay.
We do that in order to make room for taxes, any other
Right.
deductions, and to ensure that the individual is not pushing themselves right up to the limit.
Right.
Um, I think in conversations with different HR platforms, we have the ability to reduce that even further, but it's not really dictated by the employer.
Got it.
Got it. Now, is that so? It's interesting that you're capping that, and for obvious reasons. Um, is that a you thing? Is that a Claire thing
Yeah.
where you don't want to make this predatory, or is that an employer thing where they're just in order for them to leverage the service, they need to see this?
Yeah. It's really about us, Claire, because at the end of the day, this is a
Right.
consumer product. We have
Right.
believed from the beginning that this is a consumer product, and so the relationship
Yeah.
in the advance with that individual taking that pay on demand is between that employee and Claire with our partner bank. It is not related to the employer. So while it's offered via the platform that the employer uses for any of those
Right.
tools, the relationship still sits with the consumer, and the
Right.
consumer is the hero. And so we want to make sure that consumer, that American employee, is having access to that tool without putting themselves in a situation where it would be inappropriate.
I love that you interchange consumer and employee. I just love that throughout the podcast. I've noticed how you say consumer and then you'll say employee. So you use those words in such a way that's powerful. That's not normal with a lot of HR tech plays, clearly, for obvious reasons. Question I have is about the unbanked.
Yeah,
So again, maybe it does it do stored value cards or like, okay, how do we take care of the folks that aren't
yeah.
banked for whatever reason?
Yeah, it's a great question, and truthfully, that if you go back to your conversation with Nico a few years back, that was certainly the early model for Claire was
Correct.
that the vast majority of these folks were unbanked. I
Right.
think what's interesting that we've seen in the employee feedback and also in the conversion throughout our kind of process, the vast majority of folks do have a bank relationship. Now, they may not have a satisfactory relationship. They may not be getting the benefits that they could get from some of these newer providers. Um, but what we've seen is that number one, requiring them to create a new bank account creates a friction point for those
100%.
who have one. And
Right.
also, you've seen in the data for those who have taken the advances, the vast majority, it's like 80, 90%, are already kind of transferring out to their own account. So the approach that we are working towards now is that in order to give optionality, another component of control, right? In order to give optionality to the employee, we want to be able to push to any account, push to any card they have. However, for those that don't have an account, we will guide them towards a partner solution
Right.
to get them set up. And we will only be offering a provider that makes sense for these individuals. So, a very kind of modern platform, focused on low or no fees, providing access to a variety of financial tools. But I think trying to put the cart before the horse and require somebody to set that up in order to access this tool has shown that it's actually the reverse.
Right.
Where does this go over the next couple of years? So you guys obviously you've evolved over the last few years since the previous conversation. Where does this go from here? What are you seeing in the future?
Yeah, so I think we are going to see within HR, because of, again, that connectivity between employer and employee, the sheer amount of data and also dollars, right? I mean, you have payroll companies who are moving all this money on behalf of employers, either to employees or to the government. There are some, not lots, there are some payroll companies who are already getting ahead of this and saying, hey, like, we keep running payroll, but then we're sending it out to different banks. Why don't we just create our own? And so you've seen
Right.
this with Gusto. You mentioned Ceridian earlier in our chat, William. Like,
Yep.
they're saying, hey, we could have a wallet experience. Like, we're going to run payroll, but we're gonna keep those funds and allow you to kind of have full banking here. You're even hearing in the retail space, big brands are like, hey, we're just gonna create our own bank. Nike, Disney, right? They're gonna come back with the old Disney bank account. So I think you're gonna see this approach to embedded financial solutions continue to permeate in any non-financial platform that has a really engaged user base. It's too valuable in terms of bringing value to the user, to the consumer, or in our case, the employee, and it's too valuable for that platform to not try to monetize that opportunity. And so I think if you play this out, I think within HR tech, work tech, they will start introducing embedded finance into their platforms because they have incredible engagement. You look at some of these mobile app ratings in the iOS or Android store. I mean, some of these top platforms of the 100, 150 I mentioned before, these guys have tens of thousands of reviews that are 4.8, 4.9. These folks love using it for their schedule and to check
Right.
payroll. So that's an incredible opportunity to say, hey, we can offer you, financial tools that are accessible, that are convenient, that are tailored. And so I think that using something like on-demand pay is the first benefit in that embedded finance play is extremely powerful because it's relevant, right? Like, okay, I want to get paid, so this makes a lot of sense to me. Okay, now I see I can get paid from here. Now to your point, like, well, how can I save from here? Okay, maybe I need high yield savings. How can I put myself on a better path for future? How can I use this to help build my credit so that I can access other tools down the road? Like, I think this is just step one of being
Yeah,
able to
yeah,
say, hey, this plugs in here, and now we're really starting to take care of the employee because you, William, the payroll platform, or you, Ryan, the employer, this is the best way to get to the employee and not throw them out onto Main Street and make them
right.
make all these decisions on their own. Going back to my comment about confidence, where now you have this consumer on Main Street, like, oh, is that account good for me? Should I make that
Hmm.
investment decision? Oh, I don't have enough credit to get that paycheck. Excuse me, to get that credit card. You start to control this a little bit more and really guide them.
And I think to Ryan, I think one of the ways I'd answer that is consumers are going to drive this. A lot of what's going to happen over the next couple of years, as they have now. I mean, we wouldn't be here right now if it weren't for consumers saying, "Yeah, I want this," in recruiting and retention, etc. So it seems that Joel, we've talked about the kind of the four walls of the United States. Are there plans to be in other countries? Is there plan? I want to say Canada and Mexico, just kind of because I want to annex them and just make it be done with it. But do you see this going? Canadians hate that, by the way. Well, every time I talk
Yeah.
to them about
Yeah.
annexing Canada, they're like, "That's not really funny." Whatever. But do you see this kind of growing and becoming a global play?
Yeah. So look, the value that this can bring to consumers based on their relationship as an employee to employer, I think is global. I think that
Right.
that doesn't change. I think that the constructs of the way businesses pay employees, it's one thing in the U.S. where we see relatively majority on biweekly pay cycles. If you move to Europe, you see primarily on a monthly pay cycle. That makes it incredibly challenging for folks to budget and to plan to kind of handle things throughout the month. I just came from working abroad the last 9 years and had a lot of employees based in South Africa as well as India and other places, and these folks had to line up everything perfectly, right? Like you had to make sure that when you get paid on the 30th and like everything was paid right then. That's incredibly onerous on the individual. So I think that there are absolutely opportunities abroad, and I think that we're starting to be pulled in that direction as some of these HR platforms, these
Right.
HCMs or workforce management platforms are taking a more global approach. You were talking about this earlier, kind of that evolution. We've seen a few of these brands really start going after it. In the U.S., we have like Deal, there's Multiplier, there's a few other
Hmm.
folks like that, and it's really hard for them to try to find best in breed in every country and then kind of
Right.
cobble that together because now they have a hard time managing their platform. So I think we're certainly seeing pull to say, hey, cool, you can offer this in the U.S. Great. Can you do it in Canada? Can you do it in Europe? Can you do it in other places? So I think that certainly it'll be something that we'll be looking at. I think that we will want to replicate our approach to doing it with a compliant infrastructure that
Right.
partners with banks because
Right.
most important is that we want to provide an uninterrupted solution. Like an embedded solution only works if it's uninterrupted. If
Sure.
if Ryan goes to grab an Uber and that connection to his bank doesn't work, he can't book that Uber. So we need to make sure we kind of replicate it in the same way. But yeah, we do look to expand.
Do employers get hip to the fact that employees want weekly pay? And do they just move to a weekly pay system and avoid this altogether?
Interesting.
Yeah, I mean, look, I think that's the elephant in the room, right? Is that the current model of paying individuals on a elongated cycle. I mean, you could argue
Right.
that anything more than the day that you work is elongated. Like if William
Right.
works today, he should be paid today. Um, I think the question is will they do that? For a lot of businesses, this is how they manage their cash flow.
Right. They can't
Um,
afford to other, yeah.
Yeah, I mean, think about like the restaurant example, and I think it's been talked about on your show before. But like, we go to a restaurant, we charge our card. That restaurant doesn't get paid from the bank for 2 days, so they can't
Right.
pay their employee that day. But that's a really tight example. Um, I think that you also have the way that the payroll system is set up, where they're collecting wages to pay employees and to hold for taxes, and then only paying taxes on a later cycle. That's a big component of their business model. Is that going to change?
Right.
Probably not, but possible. But it is very interesting because you have a lot of these kind of newer players in the gig industry. We talked about Uber before, we've talked about Lyft, where that driver, the moment he drops you off at the airport, he hits that button and he gets paid. And so now you're starting to put some pressure on the market that if you're an employee and you're looking for your next role, do you want to have that control of like the moment I am finished my job, I get paid? Or do I need to fight with my employer that like, hey, I need access to this? So I think it's a good question. I think that there are a lot of pressures at play here, and I think that's why something like an embedded on-demand pay solution just provides that control right to the employee now, while the rest of these very large questions get sorted out.
I think the last question for me, but one of the things I love about Claire is that you'll provide transparency in that transaction. So the consumer, we'll use the word that you use a lot. The consumer, there's no shock at all. They know exactly, and I think that's one of the things that the payday loans and some of the other types of things that happen. There's no transparency or very very little transparency. So it's kind of like seen as taking advantage of someone. And in y'all's case, it's like, no, everything's up front. Like everything's transparent. The employee knows exactly what's going on. I love that. And I don't, that's not a standard in our industry.
Yeah, look, I think you gotta really breathe it. You gotta live it. I think transparency doesn't just mean like transparent pricing. I think transparency means showing people exactly what they're getting, showing people exactly how it works when they call in or email or text in to service, getting the answer up front what they want. I mean, we're all consumers, right? We're all
Right.
employees. We all go through this every day. The times where you get frustrated is because you're like, I don't understand, why is it this way? But when you can introduce a little bit more of that clarity, um, pun intended, you kind of you make people feel a bit more confident.
Ryan?
I'm good. I'm financed out. I just want to get paid. All this talk of money, and I do want to play our song. I mean, you gotta sing it.
On the road to victory.
Should I make us sing the whole thing?
Eagles fly. Score a touchdown, 1, 2, 3. Hit 'em low, hit 'em high, and watch our Eagles fly. Fly, Eagles fly. On the road to victory. EATLES, Eagles!
Does it not sound like a college fight song? Does it? No, I
We've
love
already
it, by the way.
passed the fight
I mean,
song.
an
But
incredibly successful college program, sure, yeah, we can call it that.
Yeah,
Yeah.
I mean,
I went to Alabama. I'm comfortable with successful
All
college
right. So
football.
so you know what it's like to root for a good team. You must be really
100%.
envious now.
yeah,
Yeah.
just not in the last 40 years. Yeah, it's all good.
Joel, you've been wonderful. We love Claire. Thank you so much for coming on the show, spending some time educating our audience. Absolutely appreciate it.
Appreciate you. Appreciate the time, and go Birds.